All right, so let's jump right into things. Once again, thank you so much for taking some time out of your day today to join us here on our webinar. Just to introduce myself, my name is Jonathan Brandeo. I am the Director of Learning and Development here at MLB Wholesale. And today, what we're going to be doing, we're going to jump into the world of USDA home financing. Honestly, one of the most overlooked opportunities I feel in our entire industry because most people immediately just assume that they need a large down payment or that this type of financing is only available for those living on farmland. Neither of those things are true at all. So we're going to go through and we're going to take a look about how USDA financing specifically allows you to reach more borrowers, expand your market, and of course, help out those families achieve home ownership with little to no money down at all. Now, of course, you know our mission here at MLB is making lives better, and USDA fits perfectly into that mission every single day because it helps borrowers that maybe home ownership's just out of reach. It really helps them reach that goal. By understanding what USDA is, how it works, and what opportunities there really are, it gives you the opportunity to continue to grow your pipeline on your end and be able to clearly and confidently go out there and say, you know what, I have some additional opportunities for my families that I'm helping, for my borrowers, that I can go out there and continue to assist them and grow my pipeline internally as well. Now, as I'm making my way through our presentation today, if you have any questions, feel free to put those questions into the chat box that's right here in Zoom. Of course, I always leave a little bit of extra time at the end for a Q&A session as well. But either way, we'll circle back around to any questions that came through as we go, or we can also answer questions there at the end. So let's get started and jump right into the world of USDA. So, one of the biggest misconceptions about USDA in general is that it is only for your farms or remote rural properties. In reality, there are millions of homes across just general suburban America that qualify for USDA financing. So, the biggest competitive edges that you can get with USDA, the biggest one here is 100% financing. So, really, the only other program that offers that is VA. So, if you have a borrower that is not a veteran or they're not a eligible spouse, for example, under VA, then you can go USDA with a USDA eligible borrower and property and get 100% financing. All in all, expanding the eligible borrower pool that is available there, more purchasing power for them, helping those underserved communities in your area, and a big one, differentiate yourself as someone that offers these types of financing options because you're partnering with MLB to offer them. So think about how many borrowers have lost confidence because they don't have enough money for their down payment. Well, if they fit within the guidelines of USDA from their personal standpoint and the property they're purchasing or refinancing fits in USDA eligibility, there you go. They have that assistance that they need to get that down payment covered and be able to transition into the home that they're looking to get assistance with. Automatically bringing us into that making lives better, providing solutions instead of roadblocks. So let's look kind of on a high level, the basic guidelines of USDA. Now, like I mentioned, you could do this on a purchase transaction, a rate and term refinance, or even a streamlined assist refinance. So those are the three different ways you can structure USDA with MLB. Now you have up to 100% financing available. There is a guarantee fee that's specific to USDA that can be financed into the loan itself. Now, for your FICO, it is a 550 minimum FICO. The score requirement will go up dependent on your DTI. So you can see here that your DTI max on all USDA loans is 2941. So that's going to be the absolute cap on all USDA. However, USDA does allow you to go up to a 32 front end. So the front can go up to 32 if you have a borrower with a score that is at a 680 or higher. So if you have those higher score borrowers, And you need a little bit of extra room on the front end of your DTI to go up to that 32%, then you can do that with those higher scored borrowers. Now, your maximum loan amount is going to be based around the qualifying ratios, and it's going to be based around the county income limits. So the income limits is the one of the most important pieces of all USDA loans, something we'll talk about a little bit more detail as we go along. And we do want to call out that USDA does place a significant emphasis on mortgage payment history. So they want to see that they don't have any lates within the last year. So the last 12 months, they can't have any type of housing history lates, whether that be even for a purchase or a refinance. So, of course, that's applicable to all refinance transactions. But on a purchase, if the borrower has any types of lates on the home that they currently own, for example, and they're transitioning to the next one, that could affect their ability to get USDA as well. So that's a big factor for those. These flexible guidelines still allow you to serve more borrowers, but of course, create strong loan quality across the board. Now, from an acceptable property type standpoint, it is for one unit owner occupied properties only. So, once again, that's a big one. Keep in mind it is maxed out at one unit on USDA. It can be an existing home or it could be a recently built home, so new construction. And new construction just means that a home that has been built within the last 12 months. So it's a home that's fully ready to move in. It's got its utilities connected. It's got all of its ability to move in, but it's just younger than 12 months since it was originally built. And then an existing home is anything that's older than a year. Now, manufactured homes are perfectly acceptable under USDA. That includes both your single wide and your multi-width homes. Condominiums are acceptable. What USDA actually uses, they use the FHA or HUD approved condo list in order to determine if those properties are eligible. So, big thing with that, it does need to be the entire community has to be FHA approved prior to loan application. So, USDA, we're not able to do single unit approvals. It does need to be the entire community is FHA HRAP approved prior to application if that's the type of property you're looking to use. And then it planned unit developments or your PUDs, PUDs, however you like to say them, those are acceptable under USDA as well. So whether your borrowers are looking in a major metropolitan area, suburban area, rural area, USDA can still be part of the conversation because these types of properties don't exist just in a farmland or a rural area. They exist within your areas that are closer to cities or in those spots. Now, the way to determine if it's eligible for USDA financing all depends on how USDA has drawn up their maps. So they draw up a map of what areas they consider to be USDA eligible, and that's going to determine that. And you'd be surprised what areas of the country are still considered USDA eligible, even if they're not in the typical farmland or rural type of area you might have in your mind. Now, one thing I do want to call out here, some other setup things that are specific just to USDA. The first one being the guarantee fees. Now, unlike mortgage insurance, USDA has their own guarantee fees. The first one is a one-time upfront guarantee fee of 1%. And then there's going to be an annual fee of 0.35%. So 0.35% annual fee, and then an upfront one-time fee of 1%. That upfront fee actually can be financed into the USDA loan, and it can cause the LTV to go over 100% as long as the only reason why it went over is because of that financed guaranteed fee. So USDA has that cap of 100% LTV, but it can go over that if the upfront fee is the reason why it went over. Biggest thing here is that this helps preserve cash for borrowers while still allowing them to purchase a brand new home. So it's just a great way for USDA to help more borrowers into that home ownership. USDA also has their own proprietary underwriting system. So we're all used to your DU with Fannie Mae or your LPA with Freddie Mac. So you have DU and LP. So you have those. Those are the most commonly used AUS systems, your automated underwriting systems across the industry. But USDA, like I mentioned, has their own proprietary system called the Guaranteed Underwriting System. All USDA loans must go through their own proprietary system in order to be underwritten. So this evaluates the borrower's eligibility for USDA, provides the underwriting findings, same thing, same principles to your desktop underwriter or loan product advisor. Now, big thing here is that if your company currently has access to run findings through Gus, um, this is something that you're able to request sponsorship with MLB to be able to deliver these types of loans to us. Now, in order to release findings directly to MLB, for us to act as the lender, you do need to request Gus sponsorship. We have a link that's right here in these slides. And don't worry, everybody who attends today will get a link to the slides I'm using. And of course, we'll upload this video to our YouTube page. But you'll be able to access this within the slides here. We also have the link directly on our MLBwholesale.com website if your company has not done so already. So it's not a user by user thing. It's something your company as a whole would request that Gus sponsorship with us if you haven't done so already. Then once you have a USDA loan come across your desk, you're ready to go. When you log into Gus, you'll then be able to successfully be able to select us as the lender and be able to go ahead and release those findings to us on USDA. Now, if your company does not have access to Gus at all, if you have no ability to log into Gus to run your AUS findings or your GUS findings in this case, you can reach out to our team and our team will be able to assist you with that. So that's a great thing. Our team is here to be knowledgeable and be able to assist you with anything you may need help with, including helping you run those findings through USDA's guaranteed underwriting system if your company has no access to that at all. All right. So some other things to call out here. I've mentioned already a few times that the first step here to determining if we can move forward with USDA is determining if the property itself is USDA eligible. Now, USDA loans can only be used for these types of properties. So before you move too far along down the loan process, always confirm the property's eligibility. So what you're going to do is that you're going to go to USDA's property eligibility finder here. It's just on their website. Once again, we provide you links on our website and within the presentations. You put in the specific property, or you can, if you want to put in a general area, if you don't know the specific property yet, and then it will tell you, is this area in a eligible area or is it not? And if it's not, then unfortunately, we're not going to be able to proceed with a USDA loan in this case. If it says this address is located in an eligible area, it gives you that green. There you go. That's your first step taken care of. The property itself can use a USDA loan. So you always make sure you check that eligibility as early in the process as possible. That way we don't run into any hiccups later on and find out actually we can't use this property at all on a USDA loan. So we've got that out of the way. Okay, property that they're purchasing or even the property they're refinancing is in a USDA eligible area. The next thing we need to do is to make sure the borrower themselves is eligible for USDA. So I mentioned earlier, 550 minimum FICO. We need to make sure DTI fits within the right range depending on FICO score, all of that. But the biggest piece here is USDA has income limits. Now, USDA differs from other programs because it's looking at the total household income rather than just the qualifying income. So everybody living in that house who earns income will be applied towards USDA's calculation here. So that household income cannot exceed USDA's published limits for that specific county. Every year they post a brand new list of updated income limits. And so USDA does provide some tools on their website that makes it a little bit more straightforward to ensure your calculation so you can fit within that level there. So you can actually go directly to their website. Once again, all these links are on MLBwholesale.com. They're within the presentation. And of course, you can always look up these tools very easily on your search engines. And they provide those income eligibility calculators on USDA's website where you can put in, it will let you know, okay, here's your primary borrower, here's the other people who live in the home, whether those people are on the loan or not, everybody has to be counted into the income if they're living in that structure. So understanding what these limits are helps you set proper expectations early when it comes to USDA to identify if this is actually the right solution for them to move forward. So finding that right solution, not just any solution, of course, is part of that making lives better. So all those tools are readily available there. So, of course, we talked about your basic purchase, rate and term, all of that, the basic guidelines. I'll shoot back just for one moment, just as a visual. So we talked about those basics. 550 score there can go. DTI is always maxed at a 2941, with the only exception is you can go to 32 on the front end with a 680 plus score. All of that. We talked about those basics. So that just applies your purchase, rate and term, all of that. Now, outside of your typical stuff, some other things I want to call out. First one is, let's say if you have to do a manual underwrite on a USDA loan, that's perfectly acceptable. Same rules would apply. 550 minimum score. This is the case of if you get a refer or refer with caution through your guaranteed underwriting system recommendation. Um, these are ways that you can provide strong compensating factors in order to raise up your DTI limits, like, for example, higher FICO scores, and so forth. You can have lower debt ratios, excellent payment history, limited derogatory credit, all those types of things. These loans do need additional attention. Of course, it's a manual underwrite, so the underwriter has to go through and look through these things outside of what a automated system would do. It's looking over the last 24 months, so no late payments at all in the last 12 months. So year number one cannot have any type of lates on anything. And then year number two, 24, you can have a little bit of more leniency based on that. And then if there's any type of bankruptcies or foreclosures, it needs to be a full 36 months of seasoning on either of those. So whether that be Chapter 7, Chapter 13, foreclosures, full 36 months have to have passed in seasoning in order for them to be eligible for USDA if it happens to turn into a manual underwrite. So it's possible there. It's a great, once again, another excellent opportunity for those borrowers, but you got to keep in mind what those restrictions are. And USDA is typically the most restrictive when it comes to manual underwrites under any program. Now, we talked about the 550 score, or you can go up to higher than that. But another thing that's interesting with USDA is USDA actually does allow for you to use non-traditional credit for borrowers that have no reporting score. Now, this is different than a borrower that has a low score. We're not talking about borrowers that have low scores. We're talking about a borrower who has no score reporting at all. That means someone who has never opened up any type of account that would create a credit report. And there's millions of borrowers across the country that are credit invisible. And USDA does help them with that. You could do the same thing, primary residence only, still can get up to 100% financing, fixed rate only. You can either do a purchase or a no cash out refinance. 2941 max DTI, as we talked about earlier. Your GUS is going to come back as refer or refer with caution because you have no reportable score. But big thing here, we do need a minimum of 3 months of reserves, and 3 non-traditional trade lines are required in order for that to be considered under USDA with a borrower that has no reportable score. So they can use non-traditional credit lines such as rent payments, utilities, cell phone bills, insurance bills, anything that's a recurring obligation. They can use that as a trade line instead of using a traditional credit report. We need to have at least 12 months of on-time payment history prior to the application. Stable employment, strong rent history, all of that. The collective income of the household has to be at 115% or lower. And of course, the home itself has to be located in a USDA eligible area. But just want to call out there is that we talked a lot about the score before, but you still can help those borrowers that don't have a reportable score on USDA. And then kind of the last program here under USDA to kind of really call out is the USDA Streamline Assist. So this is USDA's version of like the FHA Streamline. Same principles, but just the USDA version of that. It's mainly designed to give that net tangible benefit to the borrower to reduce payments with minimal documentation. Because with a streamline assist, there's no appraisal required, there's no ratio calculations. You don't have to run this through their guaranteed underwriting system. There's a requirement that they have to receive a reduced monthly payment. That borrower must receive a payment reduction, otherwise, they're not eligible for this particular program. So you can see some basic core program requirements here on the Streamline Assist. So they have to have, of course, an existing USDA loan that is seasoned 180 days minimum. The new loan needs to be a fixed rate 30-year term. Borrower must occupy the property, no cash out. Income and asset documentation is still going to be obtained because the major crux and the major kind of factor of all USDA loans is determining the borrower fits within income limits for USDA eligibility. So income and assets are still always going to be gathered on all USDA loans, even on the Streamline Assist. And properties that became ineligible for USDA post the original loan actually are grandfathered in and can still use the Streamline Assist. So, for example, earlier I showed you that map that told me that the property I entered was eligible for USDA financing. But let's say I'm now 3, 4 years later, I want to do a Streamline Assist. But USDA has redrawn the maps, and now my property is no longer considered USDA eligible. We actually can still do a Streamline Assist because it was a USDA loan when it was originally closed. So when that purchase originally closed, it was USDA. So it's grandfathered into the Streamline Assist. So that's a great opportunity for those borrowers as well if they need that assistance. And like I mentioned, the biggest piece here is the net tangible benefit. USDA requires that all USDA Streamline Assist borrowers get a $50 or more reduction in their total monthly payment. And that's the principal plus interest plus that monthly annual fee from USDA. So if everything is reduced, collectively reduced by $50 or more, that is going to be what makes them actually eligible to proceed with the Streamline Assist program specifically. Some other things to call out there on the Streamline Assist. The loan amount can include the outstanding principal and interest balance, any eligible closing costs, and any upfront guaranteed fees from USDA from that. And like I mentioned, borrower can't have any defaults in the past 180 days. They have to be up to date on the current USDA mortgage, and there's no traditional DTI calculations on a Streamline Assist. So as we wrap up things here, I wanted to point out this is kind of gives you a basic infographic of the process flow for a USDA loan. This is the piece that a lot of people kind of get confused with sometimes with USDA, is that USDA is pretty straightforward and easy. Think of it as just an FHA loan that has the restrictions for income, the income limits, and of course the property has to be in a USDA eligible area. Other than that income and the property requirements, FHA and USDA, they share basically guidelines. Most FHA guidelines apply to USDA. The majority of them do. But from a process flow standpoint, everything kind of works exactly the same when it comes to you do your initial application with your borrower, you pre-qualify them, you register and submit that loan over to the MLB team. We go ahead and underwrite the loan for credit worthiness, all of that. Now, what happens here is this middle spot is kind of the piece that adds a little bit extra time on USDA because all USDA loans must be submitted to rural development by the lender. So us, MLB, will submit that to them once we have a complete package. And that complete package means all of the documents that we would traditionally need for a clear to close. Once we have all the items and we're ready to issue a clear to close, our team is going to submit that to rural development to get a conditional commitment from USDA directly. USDA can take 48 to 72 hours to give us a response. So keep that in mind. That's going to add that additional time frame of how long it's going to take to close one of these is that 48 to 72 hours that we need to wait for USDA to get back to us. We cannot issue a clear to close until we have that conditional commitment from USDA. big thing to keep in mind as well is that USDA can have the ability to add additional commission conditions on that conditional commitment. So they may add things that we need to clear before we can actually issue the clear to close as well. So keep that in mind that additional conditions may apply. So that's really the only additional time frame that's added to USDA compared to like an FHA, for example, I mentioned earlier, is that we have to communicate and work with USDA Rural Development directly. They need to sign off on the loan, and then we're allowed to actually close it. And then we will close the loan. MLB will be the one who submits the closing package to Rural Development, and Rural Development will issue a loan note guarantee to us to ensure that everything is kind of tied up with a nice little bow when it comes to the USDA financing and make sure everything's good to go for that borrower moving forward. So in those cases, that's everything you need to know on a very super high level when it comes to the world of USDA. I do want to call out something real quick on a kind of little separate tangent, but it does kind of tie into a lot of the things we talked about today is our MLB Certainty. Now, if you haven't had the ability to join one of our MLB Certainty demos yet, I highly recommend you join us. We host them every single day, Monday, Wednesday, Friday at 11 o'clock Eastern, Tuesday and Thursday at 4 p.m. Eastern. Join us. You can sign up using one of the QR codes that are up here on my screen. We also have, of course, direct links on MLBwholesale.com for those registrations. This is our brand new AI pre-underwriting tool that we have created and developed internally here at MLB that right now can assist you with conventional loans, FHA, and VA, with USDA coming within the next few weeks, and lots of other opportunities on top of that. This is a game changer when it comes to making sure you have as clean of a file as possible before the loan even gets in front of a human team. Gives you the power to have a full list of conditions, a full down to the penny full income calculation that has been fully repped and warranted by Fannie Mae themselves for completely free. There is no charge at all to use this amazing new AI tool that we have developed. All you need to do, first step, is join us on one of our education webinars. That is step number one. Step number two is then to agree to our user agreement, but you cannot get access to the user agreement until you've completed one of our education classes. So I highly recommend you join us. We'll be excited to see you on there. So I want to point that out. It's an amazing new tool to help out all those loan officers and processors out there, make your job easier, and like I always like to say, allow you to be more human. Let the technology do the heavy lifting and give you more time to be able to build relationships on your end. So when it comes back to the USDA side of things, I want to just say, of course, again, thank you so much for spending some time with me. I hopefully this overview has given you kind of a greater confidence for jumping into the world of USDA, identifying what opportunities you have, and kind of wringing away some of those misconceptions that a lot of people have about USDA. The program it's not just a program. It's once again that word I like to keep using, opportunity for you to help borrowers that maybe other people didn't think it was possible for them to get financing. Every day, USDA has the potential of changing somebody's life, bringing us back around to making lives better. If you have any questions on today's presentation, feel free to throw those into the chat box now. You can unmute yourself as well if you feel comfortable. Otherwise, reach out to our client services team with any questions you have, whether that be assistance with a scenario, GUS sponsorship, property eligibility, USDA guideline questions. Our client services team is here to help you out with any of those. The phone number here on the page, you can either call or even text this number if that's more comfortable. So you can always, our team can help you out from there. So thank you so much for joining us. We appreciate your partnership, and we look forward to making lives better together.